as I've said many times, that obviously in this trade puzzle, China is the biggest piece. Getting better terms of trade is not always a straight line. It's not always a pleasant process, but I think at the end, the trading relationships will be stronger.
Welcome back to the second hour of Angeles. And of course, joining us for the entire hour, Bullseye American Ingenuity Fund Portfolio Manager, Adam Johnson. Great to have you.
Great to be here.
So China feeling the crunch over tariffs, and President Trump is not budging. The art of the deal is on full display.
Would you consider dropping the tariffs to get China to the negotiating table?
No, China's getting killed right now. They're getting absolutely destroyed. Their factories are closing. Their unemployment is going through the roof. I'm not looking to do that to China. Now, at the same time, I'm not looking to have China make hundreds of billions of dollars and build more ships and more army tanks and more airplanes.
As you mentioned, Chinese exporters are trying to find ways, though, around the tariffs, with some shipping their goods through third-party countries. There are reports, though, that Beijing is working on a list of American products to exempt from its own 125% retaliatory tariffs. Those are including pharmaceuticals, microchips, and aircraft engines. Adam, I want to come to you. This is sort of the game of chicken. Who needs who more?
Yeah.
Do you believe the data that China right now needs us a little bit more from what we're seeing that Trump said about the factories, about the exports that are starting to fall?
Well, in theory, the short answer to your question is yes. I do think China needs us more, and I'll tell you why. Because we are consumers, so we get their products and they're cheaper, fine. But they are trying to employ their people. They're trying to run their factories. And if people aren't buying their stuff, then all of a sudden, all those subsequent relationships start to break down. So, yes, I think you're right that China does need us more than we need them. But the fact is, we all kind of need each other. Just how badly we were treated. And specifically, here are the numbers. For the past 10 years, on average, we have put a 2.7% tariff on goods coming into this country. But when our goods go overseas, they face a 6.7% tariff. So in other words, the rest of the world, on average, has been tariffing us at 2.5 times the rate we have been tariffing them. That's not fair. That needs to end, and that's why this whole thing is happening. And I think if the White House had presented it that way, it would have been a lot easier to understand. So I'm not sure I entirely agree with the way we've gone about this, but I also agree with Secretary Bessent that this is a negotiation and that we are getting there, and that the end result will ultimately be very productive and good for the U.S.
Madison Scott Bessent has also said many times that we import 5 times what China imports from us. So effectively, if you cool down our imports or their exports, they get hit harder. I've sort of taken a stance on this show that, Lydia, and you alluded to this earlier. This trade war has made me rethink my addiction to cheap crap. I do not need 30 sweaters that are $2 made by slave labor in China when I could have one really good quality American-made item. Are Americans around the world starting to think about the way we consume and the amount of what we consume?
I think so, and I think you see that in some of our consumer data and just in terms of where people are spending their money and how much they're spending. The thing that worries me is more so the small businesses that acquire the goods from China and then sell them, because we like to, it's 99% of the businesses in America are small businesses. They rely on a lot of Chinese goods. So yes, I think we could benefit from having a different approach to consumerism, which China does not want to see, because they are fully, as Adam was saying, fully reliant on our consumerism. Estimates put it at like 20% of exports go to the U.S. market. And honestly, I think it's higher than that. And we're already seeing reports out of China that factories are shuttering hours, they're laying off staff. So they're already feeling the impacts before we've even seen tariffs really go into full effect. You're hearing President Xi say things like, we need to remember the bottom line. When you hear that rhetoric out of China, that spells problems, because he needs to be strong for his country and the people there, but it shows that there's going to be tumultuous times ahead. They've already really entered it. So, yeah, I think American consumers are starting to realize, maybe I don't want this. And I hope that it really shines a light on the labor practices, because our reliance on cheap goods has come on the backs of arguably slave labor. That should be something that any American is not okay with. But I do think in the short term, we're going to see small businesses impacted by that because we are so reliant, even as middlemen, on those goods.
And Lydia, the cheap goods that we talk about, and I'll call them goods, I won't call them crap. You speak in hyperbole to make my point, Lydia. The de minimis rule, which is goods under $800 originally had been exempt. And you had companies, since that's been reversed, I mean, Amazon's talking about it, Temu, Shein, they're talking about it because they benefit when you buy something under $800 and they don't pay a tax on that.
Yeah, you know, I think this is so fascinating because initially when there was talks about the closure of the de minimis loophole, this was announced months ago. You saw a lot of people that were really cheering for American manufacturing, saying this is going to be so great because American manufacturers are not competing on a level playing field with Chinese manufacturers because China is able to take advantage of this de minimis loophole, get their cheap crap, so to speak, over to the United States without paying a tariff. So let's close that. I think it's important to remember that this de minimis loophole has been in place for decades, and it's only been recently that we've seen companies like Shein and Temu really take advantage of it. I have some data. You know I like that, Brian. Between 2015 and 2024, the amount of products shipped with the de minimis loophole to the United States up by almost 900%. It really illustrates how these companies like Shein and Temu have been able to take advantage of this. So when you think about, is Trump going to lower tariffs to try to get China back to the negotiating table? Maybe he shouldn't, but maybe there are other opportunities or ways to get to talk to China. Maybe it's the de minimis loophole. Keep the de minimis loophole closed for now. Use that as a negotiating tool because we know American consumers do like their cheap stuff. Maybe that's a way of kind of creating some leverage.
Brian, I come to you on data, pivoting a little bit.
Everybody's coming to me on data. I love this. I love data. Please bring data
Resident
to me.
economist.
Okay.
This is from the Wall Street Journal. Land sales measures, foreign investment data, unemployment indicators have gone dark in recent years in China. Data on cremations, business confidence index have been cut off. Even official soy sauce production reports are gone. In all, Chinese officials have stopped publishing hundreds of data points once used by investors and economists. We basically have no idea what their economy is or is not doing. They go on to say that official GDP figures put out by China are 5% last year. They might be overstated by 2 to 3%.
Yeah.
Basically, from an investor, an economist's point of view, you look and you actually are blind when you're trying to figure out what's going on there.
And when they got rid of the soy sauce indicator, that was really a tough one for I didn't even know they had one of those.
They do.
One thing you know about a country is when they stop telling you how they're doing, they're not doing very well. I'll give you another country who you can't get data out of, North Korea. Why does North Korea not publish any data? Because the data would be very bad, right? If China has abandoned hundreds of data points over the last several years that they used to publish, tell you how they're doing, and they don't do it anymore. Chinese communism has a fundamental problem. It doesn't work. And when the rest of the world starts to treat communists like they're communists, their data gets bad quick because the government's in charge. They're the ones allocating capital. And I can tell you, communists have never been good at allocating capital. So I think China's probably in a worse spot right now than people recognize. And when you have a communist leader saying we got to focus on the bottom line, a communist focusing on the bottom line, it's not your bottom line. It's not the good of the Chinese people. It's his own political standing. The one thing I think Trump knows is he has Xi on the ropes right now, which is why he said, I'm not going to lower tariffs to get him to the table. I might lower tariffs when he comes to the table, but he's got every reason in the world to come to the table right now.
Okay, but Adam, take the other side of that, because we've often argued on this program that the one thing China has is they think in centuries. And as an American, I think in my 3-month quarterly report or my 18-month midterm cycle. Xi doesn't face elections like Trump or like Republicans. He knows his power is good for as long as he lives. So is that not the advantage, though, is they are playing the long 1,000-year game here?
Yeah, allocating capital is a very serious decision and a serious undertaking. And if you're being judged in 12-week increments, right, quarterly, it's awfully hard to allocate capital to large projects. In the same way, yes, it's wonderful to think that if companies are incentivized to come to this country and build factories, they'll do so. But, you know, it takes a long time to build a factory. And then you have to staff it. And then you have to get your supply chain set. I mean, that can be 2 to 3 years. So if you right now are a CFO of a large U.S. company, you're saying, OK, fine. I understand that if we move this factory back to the U.S., it would be better for us. But by the time we do so, Mr. Trump may actually be back to the private sector, right? I mean, it could take 3 to 4 years. So it's very hard to operate in that context. And yes, in that sense, China is more strategic in their decisions. They're a command economy. They are a communist party-controlled country, which is obviously not to my liking. But as far as central planning, yeah, it's more efficient.
I think we give them too much credit for this long-term view.
Okay.
I really do. Like, we're like, oh, the Chinese communists are thinking really long-term. No, they're not. They're thinking about how to hold on to power right now. And if they are thinking long-term, they're not thinking about things that will make their country more prosperous. They're thinking about things that will make their country safer for communists who want to lead it. All I'm saying is on the economy, let's not give them more credit than they're due. They want to hold their grip on power, and they'll do it any way they can. Making their citizens rich, maybe. Making them really poor, probably.
By the way, you know who else likes to hold on to power? Democrats.
Adam Johnson coming in hot in the partisans out there.
Good mic drop. Wish we could do that further. Gotta go, though.